We're back on Morning Trade Live. We'll get a good look at the high-end consumer tomorrow morning when American Express reports their third quarter earnings. Analysts are expecting EPS of $3.96 a pop on revenue of nearly $18 billion. Shares are up 10% in this name this year. Here you can see how AXP compares to the likes of Mastercard and Visa over the last 12 months. All three stocks are up more than 8% in the last year. Visa and American Express are the outperformers among the bunch. Let's go inside out on credit card stocks. So joining us now is Stephen Biggar, who's the Director of Financial Services Research at Argus Research. Thank you so much for your time, Stephen. So the story over at the big banks was one of consumer resilience. Is that what we're going to hear from some of these companies as well?
Yes, hi, Sam. I think so. That's kind of the theme, the narrative we've gotten from banks as well as the credit card companies over the last few quarters that, you know, don't count the consumer out just yet. They've been amazingly resilient. Of course, the higher end, upper income consumer is pulling most of that load. But, you know, these companies have, I think, both cyclical and structural tailwinds that are benefiting this, growth. And you've got, so much consumer spending growth that happens every year, 3 to 5%. And then they're layering on top the kind of the move towards digital, more online transactions, more just that shift towards digital from cash and plastic. So pretty good story, across the industry. And then you've got the rewards programs, which are very enticing, and particularly for American Express, which, as you noted, reports tomorrow. So yeah, we'll get a good firm understanding of that when these companies release over the next week.
Yeah, let's just dig into Amex sort of specifically. I'm just wondering what that's going to tell us about more so on the high-end consumer.
Well, they've, over the last few quarters, I think the theme is going to stay the same, which is that, you've got good travel among the higher end consumer. You've got, whether it's international, you've got good corporate spending still. And they've revamped the rewards programs to make it even more lucrative to concentrate your spending with an Amex card. So I think all of that will, continue to bode well for charge volumes, which tend to be for American Express. They're a little bit larger company, obviously, so in the mid to high single digits, like the 7 to 8% range for spending growth. And I think we'll probably see something similar. It's been remarkably resilient over the last 10 quarters or so, despite the some up and downs in the economy, GDP growth, and even consumer spending.
Oh, for sure. And I suppose the airlines, particularly Delta and more recently United Airlines, has sort of given us a bit of a prelude as to, what sort of trends we're seeing there with the high-end consumer, particularly, as you say, corporates. I mean, they're filling the front of the plane. That says something. How does American Express sort of stack up against the others? I mean, as far as the stock performance is concerned, I mean, they're sort of not too far apart as far as, all up over 10% over the last year. But, where do you see some of the comparisons?
Well, American Express has a few things going for them, and one is their kind of all-in nature of their product. Call it the closed-loop system, where they are the bank, they are the issuer, they are the marketer, they are the collector, they are the lender. They do all those things. So Visa and Mastercard don't do those things, and they don't have credit exposure because of it. But it allows American Express a fair amount of better opportunity to target their customers, to look ahead for fraud or loss prevention, for example. So that's actually been that closed loop system, which Discover also had, and which Capital One has now as well. And they also have, as we mentioned, the high end consumer, which tends to be more resilient, pays back their loans, so they don't have a lot of credit losses either. So I think that's where American Express kind of differentiates itself between that closed loop system and the higher end consumer that keeps their credit losses moderate.
Okay, and I see you are favorable on the group with a buy rating on all four of those names: Visa, Mastercard, Capital One and American Express. Stephen Biggar, always a pleasure. Thank you so much for joining me today. I'll catch you later. That is the Director of Financial Services Research, Argus Research. Appreciate your time. Let's trade it now with Tom White, host of Fast Market. G'day, Tom. What's your example trade for American Express?
Yeah, the option market's priced in about a plus or minus 3.7% move either way, about $12 in either direction. The stock has kind of consolidated recently, about 6% below those all-time highs that we saw earlier this year. So I think if you see that consolidation, maybe there's that chance that we could actually fall post-earnings, because even though their earnings have beat on EPS and revenue, maybe they won't, or maybe they'll sell off on some profit taking. So I looked at this a little bit more conservatively, a little bit more passively, but taking advantage of the high implied volatility in the near-term options. In the October 17th monthly options that expire in just one day, this is really short-term positioning, just an earnings type play. We're going to sell an out-of-the-money put vertical for a neutral to bullish stance. That gives me a higher probability of success on this trade. So we're going to sell the 320 strike put. And then against it, because we want to stay risk-defined, because anything can happen going into earnings, we're going to buy the 310 strike put, so a short $10 wide neutral to bullish. Put vertical, you're going to collect roughly about a 210 credit on it. That's what you can make, $210 per spread with about $790 in risk. But it takes your break even all the way down just below 318 over the next 24 hours or so. That's about a 3% cushion, almost that one standard deviation. And the probability of that short 320 strike that you're selling in this strategy, there's about a 67% probability that it'll finish out of the money. So it gives you that balance where, hey, the stock goes higher, consolidates where it is post-earnings, or even goes lower and you're wrong, but remains above 317.90. You can be profitable on this out-of-the-money short put vertical.
Okay, good look at American Express and an example trade for that name. What about Visa? You're looking at a sort of more bullish approach there.
Yeah, they report earnings on the 28th. I think if you take a look at this one's been consolidating also about 8% off of those all-time highs that we hit in June. So pretty surprising that the consumers remained resilient. This is an asset-light model. But I looked at something that's got a little bit longer duration for this stock to rebound, because it has consolidated right near that 50 and 200-day moving averages. But this gives you some time in it. You'll take advantage of that earnings event also on the 28th. So going out to the November monthly cycle, so about 36 days to expiration on this one, we're going to buy a call vertical that takes a bullish stance while offsetting some of the risks and costs on this trade. So we're going to buy the slightly in the money 340 strike call. And then against it, where we want the stock to go to is about the 365 level. So buy the 340 call, sell the 365, bullish $25 wide call vertical here on this one. You're going to pay roughly a debit of about $9.50 on it. That's what your risk is, $950. And it takes your break even up to $349.50 over the next 36 days. That's only about 2% above the current share price. So you don't need a massive move to the upside to get above that break even to start seeing some profitability on this one. And then also, because you're buying a vertical like this, it gives you that flexibility. If you start seeing this stock pop maybe above the 350, 355 level, and it expands the price of this vertical, that'll give you the opportunity to maybe close all or a portion of your trade ahead of expiration.
Okay, a good look at both Visa and also Amex ahead of both of their earnings in the credit card space, and an example trade for you. Thank you so much, as always, Tom White.